Yes. Well, first of all, thanks for having me. And I want to thank the team and all of the Cisco folks for just a great year. We obviously had good order growth in Q4. We had the great performance in the AI infrastructure orders. We actually reported that we had taken down approximately $1 billion of revenue from those orders, which was something that everybody wanted to talk about. We talked through how we feel the progress, kicking in on security, and then, to your point, this product refresh cycle that we are beginning will happen over years. And honestly, we just turned on orderability. Large customers take a lot of time to evaluate, put these things in labs before they put it in their critical infrastructure. But the point you make about the platform is really important, because as we get into agentic AI, with the low latency, constant communication that's going to occur, we're going to have to do security in the network. There is no other alternative. You cannot introduce latency by sending it to a security appliance. And we are the only company that has both networking and security technology to fuse it together to create that platform effect that you're describing.
AI is a double-edged sword, Chuck. It's margin dilutive. How do you think about that?
Well, I think we have always had a portfolio of products that had various margin profiles. I mean, we had a point in our history where the telco and the service provider world was as much as 35, 36% of our business, and that was a different margin profile than the enterprise. And so we just manage it the same way we have all along. So I'm not too worried about that.
Meanwhile, Chuck, that massive opportunity ahead that you articulate with AI infrastructure, the bringing in of $2 billion of orders, the $1 billion of revenue already, is it the platform offering that helps you push out and fend against some of the other competitors that want in on that? Of course, HPE is trying to get in, you've got Broadcom. Is that how you set yourself apart?
Well, I think the key to remember with this is that it's networking systems and it's optics. That's primarily what we're selling for AI infrastructure. And there's really only 3 companies on the planet that can deliver the networking silicon that these customers require. And we're one of them. And so, they're looking for low power requirements. They're looking for meeting their dates. They're looking for speed, bandwidth, deployment, and we're hitting that right now with them. And we've really built great relationships. If you go back 5 or 6 years ago, I had to try to convince people that we were rebuilding relationships here. And even if you go back 12, 14 months ago, when we gave them the target of $1 billion in orders, I think there were a lot of skeptics, and the team actually delivered really well. And we have great relationships with these customers now.
We are joined by Chuck Robbins, Cisco CEO, and you beat your things that previously others were cynical of, but the market moves with you. Many wanted even more in terms of your full year revenue guidance. Some are even going as far as to say that maybe you're suggesting a little bit of a cautious IT spend for the next fiscal year. Do you abide by that, Chuck?
No, we don't see that. We haven't seen any sort of slowdown at all. The only place we've seen that challenge, as has been reported, was in U.S. federal. Our product order growth was 7%. If you take out U.S. federal, we grew 10%. And if you think about security, same thing. If we take out U.S. federal, we grew double digits in security on orders. And I also talked about the fact that if we look at the fiscal year that we just entered, our U.S. federal team is actually forecasting a return to growth. So hopefully that won't be a headwind in the next year. So we haven't seen anything meaningful, but we're also cognizant that we're operating in a pretty complex and dynamic environment.
Chuck, we love to talk about the big projects on Bloomberg Tech, the big data center projects. Are there any specific examples of projects you're involved in that you think are really needle moving for Cisco?
Well, all the cloud providers are needle moving. And over time, the neo cloud segment, as well as the sovereign clouds, we think will be a big part of our business also. We're just getting started in those. If I hit on a few of those, the sovereign AI data centers that we talked about in UAE as well as in Saudi are the early ones. We're having discussions in other Asian countries, in Africa. In Europe, you have this push for on-prem sovereign applications. So from geopolitical perspective and a risk perspective, they want more control over the tech stack that they have in their countries. So that's more of a sovereign play. And we're one of the unique companies who can actually deliver, say, Splunk on-prem, or they're asking for WebEx on-prem, which we can do. So, and then the neo clouds we could talk about as well, but that's another emerging opportunity for us.
I don't think many appreciate the scale of Cisco sometimes. You've got a lot of credit, by the way, on this program at least, about how you've communicated tariffs impact. But you're basically one of the biggest and leading network chip producers globally. And this is an administration that wants more US manufacturing. So you have the volume of gear, you design your own chips, TSMC makes them for you, the economics kind of works in your favor. Have you made some commitment to do what this administration's trying to do, which is take that process that you've mastered, but just bring it to the States in some form?
Well, I think that much like Nvidia, AMD, us, others, there are a lot of companies that actually rely on TSMC for the fabrication of the silicon, and they've obviously made commitments on their side to actually build out capacity in the United States, and so we're happy to see that happening. The thing that people don't really realize is that we've maintained a U.S. manufacturing footprint all along, and so we have a footprint in the U.S. today that we can look at expanding, but I think it's just important for us right now to wait and see exactly where all this stuff lands. If you go back to 2018, when the China tariffs hit, our teams have made moves and mitigated roughly 80% or so of those. And so we just continue to look at these things as they come out, figure out what the best plan of action is, and then we act.
When you think about planning ahead and business continuity, Chuck, when you see what's happened with AMD and Nvidia and the deal they've cut to access China, when you think about exporting more broadly, are you thinking that might come your way, a pay-to-play in the future?
I have no idea. We wake up every day and we try to figure out what's transpired and what's happening in the world and how do we react to it. I've talked about over time that the current crop of CEOs in the United States have basically been operating in times of uncertainty or crisis or certainly very dynamic environments. And so we're all used to just dealing with whatever changes are coming our way. There's the old saying that you can deal with the world as it is or how you'd like it to be, and we just wake up and we deal with what comes at us and try to plan accordingly, try to do scenario planning, but then deal with it as it is.
And when you're controlling your own destiny, you've been doing a bit of M&A, and you mentioned the Splunk offering and how that helps you access the likes of Europe, for example. Any more M&A on the horizon, particularly when it comes to AI?
We're always looking. Our strategy hasn't changed. Obviously, valuations are quite frothy in that space. But if there's something that helps us advance our strategy more effectively, then we're always willing to take a look at it. I would say that M&A is not the strategy. We have our product strategy and our solution strategy for our customers, and if there's an acquisition that helps us accelerate that, then that's what we're really interested in. And you think about places like AI infrastructure or security or observability and those kind of areas, they're always interesting to us.
Chuck, how's the relationship with Nvidia evolving since it was all announced?
It's great. Our team and their team's execs had dinner last night, and we're working on architectures for NeoCloud, architectures for the enterprise. We're working on go-to-market, joint go-to-market together. So I'd say it just continues to get stronger, and we're really on the front end now of a lot of the technology integrations that we've been working on, and we're on the front end of the real enterprise wave of this AI. If you think about it, it started in the back-end networks of the cloud providers. It's obviously going to have an impact on the front-end networks. It's going to have an impact on the enterprise. And even the telco business that we saw this quarter, we had telco and cable, our orders were up greater than 20%. And a lot of that was attributed to their preparation for AI.